You're unmuted.
Hello, ladies and gentlemen, and a very warm welcome to SRB Debates. I'm Melinda Crane, and it's a great honor to accompany you once again as moderator. Rarely have we had the opportunity to meet twice in such short space of time. But as you know, if you were with us at the Single Resolution Board's annual conference in October, we did have some technical difficulties with our second panel discussion. And because we did not want you to miss even a word of our debate on the crucial issue of home host issues in the banking union, we decided to pick up where we had left off. Before we begin with a greeting from our host, let me just say a very quick word, ladies and gentlemen, about how you can participate in today's debate. We will be taking questions from you in the latter part of our discussion, and you can send them to us via Twitter at hashtag SRBDebates2021 or via the Slido tool using the event code 061618. And just a very quick word to our speakers, whom I'll introduce in just a bit. Nowhere more so than in the virtual space is timekeeping of the essence. So we would be very, very grateful if you would keep your responses later on during the debate pretty concise, meaning up to 3 minutes, but please not more. And now let us get started. It is a great pleasure to hand over to the chair of the Single Resolution Board, Elke König.
Good morning, and thank you, Melinda, and thank you for coming to Brussels once more for this debate. Good morning, ladies and gentlemen, and good morning, dear panelists, for your patience to rejoin here, and I hope that we will have a good debate. Let me immediately jump into the topic. I think we called this home host issues in the banking sector. We could also have called it home host frictions. So what is the topic of today? I would say ideally, we would not even have a need to discuss this issue, but it continues to be an outstanding challenge, in particular inside the banking union, but also beyond. There are a few reasons for this. One of them perhaps being the missing third pillar of the banking union, but another is always framed under the word trust, placed in resolution strategies, and that is the trust in the SRB, or I would say, looking at Sasha Mills, the trust in the resolution authorities in general, to really enact a so-called single point of entry, or SPE as we call it, resolution strategy. So what does it mean? Under an SPE approach, the group resolution authority, be it the SRB, be it the Bank of England, or be it our American counterparts, is committed to all subsidiaries remaining well capitalized, going concern entities that stay out of resolution. It is only the resolution entity, in other words, the parent company, that will be the direct target of resolution powers. Operational subsidiaries will be preserved, and this stay in going concern and would not themselves be, as I said, subject to resolution. So far, the theory. The SPE approach, avoids the disruption caused by the application of resolution action, potentially by multiple authorities in multiple entities, countries, within a group that's dependent on intergroup services. So I said so far the theory, and I think the theory we are committed to, but at the same time, we all need to acknowledge that most company, tax, insolvency laws focus on individual legal entities, and there is a consequence to this. So this is a challenge that needs to be addressed, and I'm very much looking forward to listening to all your ideas. As said, it's a simple approach to say we are upstreaming losses of subsidiaries, or we are downstreaming capital to the ailing subsidiary. Easy said, but sometimes a bit challenging to really put in practice. And one word that is going around, at least at the SRB, is It needs sound, dry runs, testing, tabletop exercise, however you want to call it. Let me just add one thought, because it sometimes feels that with internal TLAC or internal MREL, the problem is already solved. I would put a big question mark behind this, and I would ask also the panel perhaps to think about it. So internal TLAC should reduce any concern that the SRB, as a resolution authority, might opt for a variant strategy that's not aligned with the interests of a subsidiary. In effect, it reduces our discretion, but internal TLAC, by my standard, or internal MREL, is not the solution to all our worries. I will not go any further at this moment because I don't want to front run the entire panel, but I think it's really most important to say that ensuring an SPE strategy is operationalized fully is really a key priority for, I would speak also now in Sasha's name, for all resolution authorities, and will hopefully help us overcome the home host friction that otherwise might fragment the market and might be detrimental to financial stability. And let's be clear, neither ring fencing nor internal MREL nor all kind of ideas, I take care of myself and the rest can take care of themselves, is really solving the problem. With that, I would stop. I am very much looking forward to the debate, and I'm also very much looking forward to questions from panelists and to leave this room afterwards with having gone a big step forward in solving really any issues around single point of entry or home host. Thank you, and Melinda, over to you again.
Thank you so much, Elke. And as Elke has reminded us, the fact is home host frictions do remain an ongoing controversy and a perennial topic also for the annual conferences of the SRB. And at the very core of this debate is concern, Elke just referred to it, that host countries in the banking union continue to ring fence foreign subsidiaries operating within their jurisdictions, and thereby effectively undermine the purpose of the banking union and the goal of fair and orderly resolution. So how can we move toward a unified Euro-wide approach to resolution of cross-border banks? That is one of the key questions that we will pose to our very eminent panel. And now it is my great honor to introduce them. I'm going to keep the introductions very brief so that we can maximize our time for debate. It's a pleasure to welcome Sasha Mills. She is Executive Director of the Resolution Directorate at the Bank of England. Great to see you again, Sasha Mills. Thank you so much for taking the time to be with us. Also a pleasure to welcome David Livingston. He is CEO EMEA at Citibank, and he also joins us remotely. Thanks to you as well for making time in your schedule for this debate. And I'm pleased to greet Tobias Tröger. He is Director for the Cluster of Law and Finance at the Leibniz Institute for Financial Research, whose acronym is SAFE. Thank you so much for being with us, Tobias Tröger. And a pleasure to welcome Sebastiano Laviola. He is board member of the Single Resolution Board. He also joins us remotely today. Sebastiano, great to see you again. I would like to begin, if I may, with you, Sasha Mills, and the desire to continue to serve European clients after Brexit has prompted many financial institutions to relocate activities from the UK to the European Union, which of course could well have implications for supervision. So I wonder if you can just say a word about whether you believe the situation has now stabilized and how you see the implications for the city.
Melinda, thank you very much. Good morning. Good morning, Elke, and all my fellow panel members and those viewing and participating in this really important debate. And as Elke said, I think ideally we wouldn't be having the discussion twice, but actually it's such an important topic. I think it's good that we take this opportunity. But really turning to your to your question, Melinda, there's two key points I want to make to frame my answer. Firstly, and this reiterates some points made by Elke, single point of entry resolution strategies for cross-border banks mean that home and host authorities are dependent on each other, regardless of whether the banks themselves are structured as branches or structured as subsidiaries. And resolution is about keeping a failing bank together and operating with losses paid for by investors while the bank restructures itself into a more viable business. And this has not been changed by Brexit, and nor by where firms locate their businesses. Additionally, that dependence means cooperation and coordination are needed to build and maintain trust so that authorities operate in unison, or they will create financial instability, not stability, through their actions. And again, this has not been changed by Brexit. So we need to set the incentives up in a way that helps promote the right behaviours by banks and the authorities wherever they are in the world in the run-up to and then during a resolution. And striking that right balance for home and host is in all of our interests and will be key to a successful resolution. Hosts triggering resolution in an uncoordinated way is likely to destroy value, increase operational risks, and make a successful resolution less likely. Authorities responsible for globally active banks set, as Elke was saying, single point of entry resolution strategies. We're trying to rip up parts of and sell parts of an integrated organization in a time of deep stress is not only impractical, but it's damaging. These businesses are highly integrated with risk management and risk taking intrinsically interconnected. Keeping critical functions together helps to minimize losses overall and allows them then to be distributed fairly. But turning to the detail of your question, and I will accelerate now. Thanks to the extensive preparations made by the authorities and the private sector, cross-border financial services have not been disrupted following Brexit, nor in the UK or in the EU has stability issues arisen. As an open financial centre, the UK's approach to branching, as we're talking about, as Elke was referring to, and you were also, Melinda, our approach to branching is driven by our ability to supervise effectively, and is the same wherever wherever banks are branching into the UK from. What does this mean in practice? Supervisors need to be able to see inside the firm and how the branch fits into the group. See inside and recognise what they see in the home regulators, and be shown the data that they need for decision making. This does not mean additional capital or liquidity requirements unless that information is not free flowing, or we're not confident that capital and liquidity will be free flowing around the group from the parent at a point of need. This approach, what's underlying here? This approach reflects our view that openness supports efficiency and risk-taking in the financial system. Where we seek a subsidiary, it's driven by the level of retail deposit taking, not by wider critical economic functions like trading, where the business is global and the economy is a scale of driving the efficiency in that business model. But of course, being open to globally active banks means cross-border risks are introduced, and these need to be managed. And the best way to oversee these risks is through, in my opinion, a combination of internationally agreed high prudential standards, close international cooperation, and this is regulatory across supervision and resolution, and a shared assessment, of course, of those global systemic risks. Now, this is the theme of this debate and the panel. We not only need to be able to supervise a firm effectively, but have similar confidence in individual banks' resolvability and the comparability of the home resolution regimes. As most of the large cross-border firms in London, active in London, have a business model which necessitates the use of single point of entry resolution, the trust that Elke was referring to is needed to supervise and carry out a resolution. And that depends on, as I say, our understanding of each other's regimes, meaning the same things by the same words and keeping that information flowing. And the Bank of England's committed to this international coordination, including working really cooperatively with our EU colleagues. This has not diminished, and it's in a very good place already. We have very strong working relationships with our partners in the EU, and we'll continue to make those relationships even stronger. On the resolution side, I'm pleased to say we have a deep and close working relationship with the SRB. We have many friends and colleagues within the organisation. We have many bilateral touch points, colleges, CMGs, and then internationally we work collectively together in under the auspices of the FSB. And similar arrangements exist on the supervisory side. So for me, that's the basic answer to your question. Thanks, Melinda.
Thank you very much. And let me go over to Tobias Tröger, whose institute, SAFE, recently raised the specter not of coordination, but in fact of competition. SAFE suggested that significant differences in the structure of banking supervision could actually wind up resulting in regulatory competition between the UK and Eurozone countries. So I wonder, are you already seeing significant indications that that is occurring? And how do you see the potential impact for home-host relations of UK banks that are still active in the EU following Brexit?
Yeah, thanks, Melinda. Indeed, what we did in this study that you're referring to is we wanted to look beyond anecdotal evidence at more persistent and systematic indicators of different supervisory approaches that we might observe between the UK and the EU, particularly the Eurozone. And we, for instance, we looked at the development of risk weights that large banks, so those supervised by the ECB and the Bank of England, determine under the internal ratings-based approach, because there we think the tougher or a more lenient supervisory stance really makes all the difference. And what we do is we compare the risk weights of corporate borrowers who have lending relationships with both ECB directly supervised banks and nationally supervised banks. And the general pattern that emerges is that risk weights increase under the ECB supervision within the single supervisory mechanism, and stay flat under national supervision. And that holds particularly true with regard to aggregate risk weights of German and French ECB supervised bank in comparison to comparably large Bank of England supervised UK institutions. And a second indicator that we looked at is the macroeconomic scenarios that underpin the EBA, European Systemic Risk Board stress test of 2021, and also that of the Bank of England. And there we also find a pattern that key parameters indicate a tougher or more lenient supervisory stance. The stress test results don't matter that much because we think that the input is really key in these exercises. And here what we find is that the UK assumes a deeper dip, but also a faster recovery from the COVID-19 shock. So it's an L versus a V. And this is true with regard to the GDP path and the unemployment rate. And therefore, we can again see that the UK authorities take a different stance, but this is definitely not out of step with international developments, because as a control, we also look at what the Federal Reserve does in their 2021 stress test, and we find that very much aligned with what the UK authorities does. And therefore, where does that leave us? Well, the overall assessment is that we see the UK authorities may take a somewhat different, arguably less demanding approach, but by no way they are embarking on a competition which can be described as a race to the bottom. So the home-host relationships, which we are concerned with today, should definitely not be driven by a zeal to impose EU standards on UK institutions at any costs. So this resonates exactly with what Elke and also Sasha said. So we need mutual trust in these supervisory approaches, and it is key to build this trust in day-to-day supervision and information sharing, and particularly, of course, in resolution planning. And therefore, I think the interaction in crisis management groups or resolution colleges will be key. And Sasha already hinted at that there are good working relationships, and they have to be used in order to understand differences in supervisory approaches better.
Thank you very much. Let me ask Sasha if there are any points there that you'd like to speak to very briefly right now, or shall we come back to them? Okay, thank you very much. And let me go on to David Livingston. And a big concern for host jurisdictions is that a major bank would transfer liquidity and capital to the parent company in case of a systemic crisis or crisis in the home jurisdiction. And how does a multinational GSIB like Citigroup provide assurance to the subsidiaries that they, in fact, would not be left alone or see their resources depleted in the event of a crisis?
Melinda, good morning, and thank you for your question. Though I just do want to start picking up on the point that was mentioned in your question to Tobias and the response. As a GSIB, we certainly, and Brexit was an event, but it really wasn't in a global sense, a sort of global fragmentation of supervisory oversight or even approaches to the topic of resolution. And I'd say that we certainly don't see there being an arbitrage or a competition between resolution entities or regulators looking to sort of dash to the bottom on this dimension. As Sasha said, one of the great advances, and indeed we saw this in COVID-19, and why the banking system, supported by efforts of individual governments, performed so well during COVID-19 was indeed the prudential requirements which had been put in place over the 13 years since the financial crisis, which put the banking system in much better position. Now that's something we can all take confidence from, that an individual organization should be also taking into either a macroeconomic event or a idiosyncratic event that may impact them as they go in towards a resolution process. So we don't see there being competition, nor do we see there being arbitrage in the resolution world at the moment. But to your question, and giving you a very sort of practical answer, that everyone is informed by many things, but everyone is indeed informed by what happened in Lehman Brothers' failure during the financial crisis, and that abandonment of a subsidiary in that time. The practical steps that an organization like Citi takes, and we operate across not just the European and UK dimensions, but obviously globally, as a single point of entry company, is that we must be very practical. And so the practical steps are the pre-positioning of resources, and those resources being not just in the local entities in the host countries, but also making sure that within our framework, we've got pre-positioned resources below the parent level, ready to be deployed in the event of the need to transfer losses from the host, or indeed to give the host local entity support in the event of a parental crisis. So that pre-positioning is very important, and we can maybe sort of come back to that later. The other element, though, and Tobias touched on this in terms of scenario planning and stress testing, is something which is very important in the preparation. And it's in the preparation not just at a parent level, but particularly important at a local level, where in addition to the business as usual, if you like, prudential, capital liquidity requirements, you put in place additional in order to cope with the scenarios that you might have, which increasingly are becoming not just macroeconomic, they're becoming operational scenarios and operational risk, and putting those in place in order that those pre-positioned resources are identified, stress tested, and overseen by local supervisors and the SRB in the case of our European entities, so that there is comfort derived from that preparation. And then the last piece is preparation for decision-making and governance in the event of resolution. And I'd say that the legal entity focus within inside GSIBs is night and day improved over the last decade or so in terms of understanding what is required. We all operate, and Sasha said this, global operating models, but they have to work within legal entities as well. And that's on dimensions like risk management and so on, but it's also critically in resolution.
Thank you very much for that, David Livingston. Sebastiano, if I may come to you, I'd like to drill a little bit deeper on a reference that Elke made in her opening remarks. She talked about TLAC and risk-weighted assets and whether, in fact, that obviates the need for concern about the frictions we're talking about. Now, the fact is all 8 GSIBs headquartered in the European Banking Union are comfortably fulfilling requirements to hold a TLAC amount of 18% of risk-weighted assets or 6.75% of leverage exposure. So does that mean that the GSIBs are in fact fully resolvable and hosts' concerns are or should be alleviated?
Thank you, Sasha. Thank you, sorry, Melinda, and good morning, everybody. Well, I think to your question, I would say this is effectively the situation today in terms of high level of available TLAC reached by the banking union GSIBs. And this provides some comfort on loss absorbing capacity that has been put in place both in terms of quantity and quality. So all our GSIBs are comfortably above the required level of TLAC, external and internal. This is a big step, of course, in ensuring that losses are not assumed by taxpayer, that financial stability is safeguarded, and that there is continued provision of economic functions. However, this is by no means the last step. This is not the end of the journey, of the tunnel, or as we say, and there is no reason for complacency, because when we speak of full resolvability of GSIBs, say of any bank which is earmarked for resolution, of course, the loss absorbing capacity recapitalization amount in this case is very important, is a crucial pillar, but it is not the only one. Because beyond financial resources, we have to have also, and as has been also underlined already, for example, by David, we have to have other areas which would give us comfort towards resolvability. Just to name a few, it is, for example, the capability in terms of information systems, or credible arrangements for operational continuity. If I take a strategy different from bail-in, appropriate capability to identify the perimeter of assets to separate a part of the group or of the legal entity from the rest. I know that this is not immediately easy to do. However, this is fully envisaged by our legislation in Europe, by the FSB provisions. And I would say that the issues concerning GSIBs, of course, are not only valid for them, but are valid also for all the other banks under our remit. And to touch a point that it is important in this HOMOS debate, as David said, it is important that to have a sufficient amount of so-called unallocated resources ready to be deployed, in addition to the prepositioning of MREL, of course, but I believe we will discuss further these issues, whether it is necessary to have the preposition or we have a waiver. So what are the plans of both authorities in general? But I was saying on these unallocated resources, these have to be ready available to be deployed in the various parts of the group. And here it is important that there are not constraints within a bigger group to take these resources from wherever they are and to deploy them in other parts of the group. And this means that there have not to be too many safeguarding constraints in moving resources from one part of the other. So we are at the core of the debate of the free flow of capital and liquidity. Much easier said than done, as you know, particularly across jurisdiction. So we are at the core of the functioning of the single point of entry, both within the European Union and in particularly in the banking union, but also globally. So it is not by chance that Sasha, for example, mentioned very correctly the strongest in which we are all engaged, at least in my experience, since when I am at the SRB, the major jurisdictions globally in active in resolution, so the SRB for the banking union, the UK and the US, in our efforts to improve the cooperation and coordination efforts, both within the FSB groups, but also in other fora where we play with different types of exercises and simulations in order to stimulate and to enhance our level of awareness of what might happen and our level of cooperation. I believe that we'll go further into the
Indeed.
SP issues, and I would stop here. Thank you.
Thank you. I was just going to say we're going to come back to that shortly. So thank you very much for that, Sebastiano. But let me drill deeper on another aspect of single point of entry and come back to David Livingston, if I may. And a key element of making the single point of entry strategy work and also providing assurance to subsidiaries, the point that we were discussing a moment ago, is ensuring that there are credible mechanisms for the transfer of losses from subsidiaries to the parent level. I'd like to ask what the main challenges are that banks like yours face in setting up such mechanisms, and what you see as the single most important step toward a solution of those challenges.
I think it's always hard to pick a single point in this, or single challenge in an area such as resolution, but I would point to sort of two or three. I'd mentioned the pre-positioning, and Sebastiano also talked about that. And that is critical to have that preparation. But then there needs to be confidence that particularly pre-positioned resources beneath the parent level and above the local entity are there available to be used in the event of this resolution event. And how is the GSIBs have approached this is to put in place legally binding arrangements between the host entities and the intermediate parent entities. And this is very important because ultimately, what we all know happens in a resolution type event is that there will be cross-border, which means between legal entities, there'll be challenges, there'll be creditor challenges, other things that may happen in a real-world event. And having that confidence of a legally binding arrangement through which the capital liquidity support must flow, not could flow, must flow, is really a very important component. Mm-hmm. The other thing that, and I would say, and Sebastiano sort of touched on this, is that even operating a global model, the lines of funding, clear funding lines, are very, very important. And so the city's been through this, I'm sure other organizations have been through this, rationalizing the legal entity steps. Every legal entity has a board, every legal entity has a management team. There are decisions to be made, and in a resolution event, lines need to be clear, they need to be understood, practiced, but they also need to be as frictionless as possible. And our resolution framework has focused on that issue at the same time as retaining the benefits, and particularly in our wholesale banking activities of a global operating model for all the benefits that we know for the financial systems and our own activities. So I would point to those two challenges as being practical things that we've needed to work on inside Citi.
Thank you very much. And let me go back now to Tobias Tröger, and Tobias, feel free if you'd like to weigh in on other points as well. But I'd like to ask you about the work of the Leibniz Institute in maintaining a permanent dialogue with governments and parliaments about key questions on financial markets, with the aim of developing a better regulatory framework and solidifying the regulatory framework that we have. So what are your main takeaways when it comes to this particular area in terms of bank resolution and home-host relations? What would you say are the priorities?
Well, indeed, one of the recurring themes that we encounter in these dialogues is really that the banking union, particularly the single resolution mechanism, has not really delivered on one of the key promises that was associated with supranationalizing resolution. Because if you recall, centralized resolution is a cure, because putting at the apex of the whole institutional arrangement an impartial supranational institution, that is a cure to many of the home host issues, because you can rely on someone who is indeed looking at the greater good and not so much at individual preferences of economies that might diverge in the case of banking resolution. And the problem with the current framework is that, as Eke Koenig once put it, resolution currently is for the few, not the many. Because the so-called public interest assessment is done by the Single Resolution Board in a way that it only catches very few institutions. And I must admit that, this is something that is not necessarily predetermined by the regulatory framework, because there's nothing in the wording of the relevant regulation that makes it require that the stance of the SRB is so restrictive. And particularly in cross-border scenarios, I think it is urgent and important to convey to the markets that the Single Resolution Board will take on resolution cases within the banking union, regardless of the significance of the failing institution, if there are cross-border ramifications. And let me just briefly hint at a very subtle aspect here as well. To make the SRB a very effective supranational institution, you also have to look at decision-making structures internally. And basically, there it looks pretty good, because the Single Resolution Board takes all the decisions pertaining to specific institution in resolution in the so-called executive session. So the full-time board members on the supranational level take the decisions. However, and that is important, whenever a resolution scheme involves a significant contribution by the Single Resolution Fund, and be that even for the purpose of liquidity support, we're back in the so-called plenary session, which involves all the representatives of the national resolution authorities. And then you enter a decision-making process which is not really supranational, but dominated by national interests. This is problematic. And so I would submit there are two regulatory tweaks that need to be taken. One, I think, is easily achievable through a reinterpretation of the public interest assessment. And the second one requires some regulatory intervention. But as we know, there is a review of the crisis management framework at the moment. And there, I would say, let's also look a little bit at the internal governance structures of the Single Resolution Board and make that more supranational.
Thank you very much. Let me go to Sebastiano to see if he would like to pick up on those points. And then I have an additional question for you as well, Sebastiano, but perhaps you wish to say something first of all to those points. Sebastiano, I think you're on mute.
Yes, on what Tobias said, I think that, I would probably agree that, of course, the PIA, has applied, at least we at the SRB applied to any bank under our remit, but as a matter of fact, in some cases, PIA is negative. This it is for the SRB. These are a minority of the banks under our remit. But of course, if we move to banks that are LSIs, then the situation is widely different. I have to say that the legislation also envisaged some safeguards when Tobias said that there is the deployment of the fund, and there are enhanced mechanism of control to assure that the case is needed. And therefore, from this point of view, I would not have much to add. In general, on PIA, however, I would say that from the experience that we have had until now, while I am in favor of retaining some degree of flexibility and discretion for the competent authority in the way it is run and applied within the criteria set by the legislation and by the policy, because one crisis is not equal to another one, and we have enough mechanism to safeguard a level playing field and consistency of decisions. So it cannot be only a deterministic approach set once and for all in the legislation. However, from our experience, also through the work of the EBA, we have seen that there is a wide range of approaches across the NRAs in the European Union, and probably some greater need of consistency is needed here, which doesn't mean deterministic approach. but probably some better, precision or tweaking or some provisions would help in the legislation or in some interpretation of the legislation. I would stop here.
Thank you very much. In fact, during the annual conference in October, we did address the public interest assessment, and those or excerpts from those discussions are still available on the SRB's website, I believe, and also on YouTube if you care to refresh your memories, dear ladies and gentlemen. Sebastiano, just if I may, one brief follow-up question to what we heard also from Tobias. He talked about the CMDI review as perhaps an opportunity to address some of the challenges that we're talking about. And the fact is that the banking package has created a complex new set of rules that actually, in some respects, could facilitate or spur on ring fencing. So I wonder what modifications to the crisis management framework you think could help to really generate the kind of trust among home and host authorities that all of you have been talking about, and thereby perhaps make the perceived need for safeguards obsolete.
Thank you. Well, look, I would say, first of all, that the banking package, which was, as we all know, a risk reduction package, introduced a much wider scope for internal MREL requirement, essentially for all the subsidiaries of a cross-border bank. So this is a very, very big change with respect to the BRD1. On top of that, as you said, there are a number of safeguards introduced because of the almost debate at the time, which has not much changed, I have to say, we're there to provide insurance to the host member states regarding the existence of sufficient resources to be absorbed from the parent level, and then the downstreaming of capital and upstreaming of losses. But now, what is this debate about? So why we are confronted with this problem? Is there a lack of trust and confidence? Is there that it is a problem of operationalization, and what we can do? I would start before resorting to changes in the legislation, maybe that this is needed, but to see what is possible to do in terms of better understanding what are the legal and operational constraints in fully operationalizing the SPE. So what is the thesis of the supporters of so-called universal banking? They want, of course, deploying much better cross-border liquidity and capital within the banking group. So without too much ring fencing and provisions and prudential or resolution provisions, and because this also facilitates not only the circulation of capital liquidity, but facilitates probably the consolidation of the banking system that probably we need in Europe. On the other hand, the host authorities fear that if there is no prepositioned MREL, so if there is an MREL waiver, then there might be problems in case of need because the parent company might not be willing to engage itself. There could be no credit or worse-off issues or corporate laws issues, duty of care, fiduciary duties of vis-a-vis the shareholders of the parent. So this is the debate. What can we do now? This is at the core of the SPE. At the SRB, we have engaged in a full program regarding the operationalization of the SPE and how we are going to do in assessing, first of all, if there are residual legal and practical obstacles to the transferability of funds from the point of entry to the subsidiaries. And these has also a bearing on the national procedures that we call national handbooks, that's to say the procedures that have been put in place to execute a resolution scheme in the approach that we have in Europe. We have a central body deciding a resolution scheme, a national authority executing the resolution scheme. But an important point that I think David mentioned is what? To make resorts, probably to a bigger use of so-called contractual arrangements or intra-group support arrangements, which are envisaged for ongoing today in the legislation, but are not used at all. And you know that there is a proposal from the ECB banking supervision side for ongoing to make them part of recovery options and recovery tools, so to be used under the control also of the supervisors to give reassurance to the host countries regarding the use of these arrangements. Of course, they have to be, not only resilient proof in ongoing, but they have also to be resolution proof. So they should be used also and be enforceable in case of resolution. And where they are mostly important, they are important where, in very unlikely cases, there is a loss which goes beyond internal umbrella. This is unlikely to happen if we have well calibrated the resources, and in most cases, the parent will intervene because it probably it is in the interest of the whole group to rescue, to not to leave the subsidiary alone. However, we have also to recognize that this may not be an unlimited guarantee. No? So we have to understand how this can work. And if it is not enough to have these contractual arrangements working in ongoing, then we have to beef them up with some statutory provisions so that they can work and be legally enforceable, as David said, also in a resolution case. This would go a long way. I conclude by saying that this is all good. We want to go down this route, really in testing the real banking groups, in testing with some scenarios what would happen in this or that situation, depending on the country and depending on the structure of the group, because devil is in the detail, as also David mentioned. But an overarching issue that would greatly facilitate the trust and the well-functioning in the banking union, in the European Union in general, of these mechanisms is what? Is of course the third pillar. We might appear naive, technical authorities vis-a-vis the political debate, which essentially has got to a halt. But it is perfectly clear that if a national deposit guarantee system is not left on the hook alone, and there is instead a pool of shared resources to face the losses, not only in computation, because you use the EDIS, so this pool of resources, also to transfer asset and liabilities. So manage at the center in a neutral way, and this would of course mitigate very much the fears of the host countries. Thank you.
Thank you very much, Sebastiano. And unfortunately, we're going to have to leave EDIS out of this discussion. But of course, that is also something we talked about in detail at our annual conference in October. Sasha Mills, if I can come back to you and ask a little bit more about the workings of crisis management groups. The fact is that as the resolution authority for a major financial center, the Bank of England is in fact not only the home authority for 3 GSIBs, but also participates in a variety of crisis management groups in the US, within the European Banking Union, and also, of course, in Asia. Given disparities in the approaches of different crisis management groups, can you just say a little bit about what good practices you've encountered that could perhaps provide lessons and models for others?
Certainly, and it really brings to life, I think, the CMG, the kind of nature of the discussion we're having, and some of the points that Sebastiano and David have already made. And I think sort of part of this is to remember what a resolution is. I know it might sound trivial, but it does frame, I think, the type of discussions and where they should be focusing on in the CMG. It's essentially a transaction that needs to happen at speed and where we are likely to only have one shot at getting it right. So that does make the preparations that we do locally and cross-border really, really important, and that we do some work to assure ourselves about what's in place at firms and between jurisdictions, exactly as Sebastiano was just saying. And it will, this is trying to make a very, very complex set a transaction for a global institution, it's going to be quite hard. It's going to be, it will be, there'll be a certain amount of messiness to that. So I think, as you say, the key point is that the home and host work together and that we practice crisis, we do walkthroughs, we do all of these good things and learn to understand and rely on each other's information needs and what we would expect to happen as we go through that kind of stress continuum into a resolution. Then that's where the CMGs really play an important part in the trust discussion we've been having, that ability to plan collaboratively and act collectively in crisis. Now, these meetings are well established. Policy frameworks are now, broadly mature, not identical, but broadly mature across jurisdictions. And as you point out, Melinda, I attend, or at least in the old days, you used to get on a plane quite a lot, but now it's more virtual. Lots of different CMGs. And I think they've generally been good at enhancing authorities' preparedness and coordination. And I think the next phase is really about understanding more about the firm's own operations. We've done that, but we have to keep going in that space, and facilitating feedback to firms because they're operating in lots of different jurisdictions. So I think it's important when you're hosting and participating in a CMG to help with that clarity of communication and the sequence and decision making in the different regimes. But I think as we move from that sort of more of the policy phase and using things like the FSB's resolution assessment process to help summarize where we've got to with firms, I think it's now really turning the conversation at the CMG to questions of assurance and validation. So how sure are we that the firms have indeed done what they describe really rather smoothly in their documentation and the super PowerPoint presentations? How are we sure about what does that look like? And of course, the firms are doing their own testing, as David had said, and they share those results. I think that's really important. In the UK, we've developed the resolution assessment framework, which seeks to address this issue directly. So it sets out a framework for assessing and then assuring ourselves that a firm's ability to carry out a resolution is indeed as described, and that therefore the progress that we might need them to make can be targeted. And we share this work at CMG. So that's then trying to share our assessment of firms' preparedness and the progress that they've made. And of course, an important part of the CMG is also to be listening to what other jurisdictions are doing, the products of their testing, how their framework fits together. So I think that is a really important development in recent years. And of course, the SRB's own work on expectations of banks is very much aligned here. And so that, if I think of that type of CMG, we're exchanging those views, and it can at a level of detail that we haven't previously been able to do. So I think that's a kind of key step forward. The other important thing I think is ensuring that we understand each other's regimes, how the decision making works, again, as Sebastiano was just describing, and finding ways of sharing our expectations about behaviours in crisis. And we can do this in a number of different ways. There are international fora like the Bank CBCM that's produced best practices. And this, I think, is really good to have an inventory of good practice. Perhaps I could bring that to life a little bit. And again, just making the reference back to Sebastiano's point about funding flows, having a look at how firms, their capabilities for identifying their funding needs, what the mechanisms look like, how are they sorting out collateral, that type of things. Do specialist deep dives. I think that's really helpful to share in a CMG. Other topics such as, say, valuations. Can they value their book in a suitable time? Do they have the systems that talk to each other, that they can do the assessments for no creditor worse off calculations? These type of things, actually lifting the lid, looking down in through an organization, and these are large, complex, multi-jurisdictional, multi-currency, multi-time, all of the multis, and have a look at that and learn that, feeding it back through to sort of like playbook walkthrough type exercises. So I think this is ongoing work, and it's very much an approach that we support, and I think it can, and we see it in other jurisdictions, so that can really bring it to life. So very keen to keep going in that direction. Thank you.
Thank you very much. And before I ask David Livingston to weigh in on essentially the same point, let me just remind you, ladies and gentlemen, we are eager to take your questions. We're going to do one more quick round of dialogue here with the panel, and then we will go to audience questions. So please do send them to us either via Twitter at hashtag SRB Debate 2021. You'll see the slide hopefully now, or by Slido, going to slido.com and using the event code as you see it there, hashtag 061618. Thank you so much. And let me go now to David Livingston, if I may, and ask you to talk a little bit about Citigroup's experience with crisis management groups. The FSB's recent stock taking found that, in fact, work within CMGs has advanced considerably. I wonder if, on the basis of your experience with authorities from different jurisdiction working within crisis management groups, you would agree with that assessment? And where do you see both areas where things are working particularly well, but also where there could be some improvements?
So in answering that, Melinda, I would agree with everything that Sasha said, except maybe one word, which is the smooth presentations. I hope when you talk to they're substantive presentations, not smooth ones. But sort of that comment aside, I said everything Sasha said about greater understanding, doing common views of individual organizations and so on from the supervisory side must be a positive thing. And certainly for us, greater alignment, if you like, and so on, is actually better for us, recognizing that within the EU or the United Kingdom or the United States, if you like, the objectives of supervision and resolution are exactly the same. But it's the how you get there which is different on the headline level. But the substantive work that Sasha described of getting in and sort of saying, right, what are the scenario plans? Have you tested? Show us the flow of exactly how resolution would work at a detailed level. Harmonization of that supervisory approach and being able to share that between agencies within the CMG is, we think, a very, very good thing. But maybe one sort of to do, if you like, is that this is an area which doesn't remain static. And I think the SRB is, and some of the things in Elke's own opening were sort of indicative of further work and approach to both within the European Union, but also the EU as part of a global banking system. That the SRB's work will be dynamic, so with the Bank of England, the FDIC, OCC, and so on. So the CMG has a critical role to play, not just in individual banking, oversight of individual banks, but also keeping up to date with where each of the resolution entity supervisors are progressing with their own work. Because, as you know, we wouldn't be having this panel if people didn't feel that there was progress to be made. And so, as that progress is advanced, using the CMGs as a forum to share where everyone's going. And I suppose, if you allow me, one last point is, we know in crises, individual relationships, trust, contact, understanding, and institutions change, people change, but having that really important trust between supervisors is critical, and the CMGs have a role to play in that.
Indeed. Thank you very much for underlining that. Let me go back to Tobias Tröger and ask you about the academic debate and whether there are suggestions and concepts emerging there that could also help to make the kind of improvements that David Livingston was just talking about. One thing that is sometimes put forward and that we certainly have discussed also at past annual conferences is branchification as a way forward that could perhaps better accommodate concerns of host authorities. So if you wish, speak to that, but I wonder if there are also other concepts that you think are meritorious.
Let me just take one step back, because I think you're mentioning branchification now. We've discussed intergroup support arrangements, and the step back that I want to take as an academic, because it's a privilege, we can think about these things whenever we want, not when there's a case coming up. If you take the step back, both these arrangements are actually ambiguous, because, of course, if you have a meaningful and binding intergroup support arrangement, or you have a branch structure, then host authorities are indeed assured that the full balance sheet of the banking group or the institution backs the domestic operations. But from the perspective of the home country, of course, that is a problem, because that also means that you import foreign crises into your banking system. And similarly, also, of course, if crisis originates in the home economy, then they negatively shock host banking systems, which are perfectly sound until then. And then, of course, all of a sudden, the group does look so trustworthy. And so therefore, if you think this through, that there is a regulatory stance taken that goes in the opposite direction. And if you think about the treatment of significant third-party branches in the recent 2021 package that was published by the European Commission, forced subsidiarization, and therefore it is ambiguous. And I just want to come back to the original point that you were making. I think that all of these institutional arrangements are somewhat incomplete, and they need to be somehow supported by arrangements that shore trust. We've discussed that times over and again here in this group. And let me just hint at one thing that we haven't discussed.
Tobias,
Yes.
Tobias, forgive me, but your sound is very broken up. I think I'm going to give you a moment maybe to stabilize your connection, and then we can try to come back to you very briefly.
Sure.
Because we're having a hard time understanding you. Sasha Mills, can I come back to you with a question about pre-positioning of MREL? I did want to get your perspective on that as well. And of course, there has been recent discussion around the level of pre-positioning and some concerns raised about the implication for banks' flexibility in times of crisis. How much trust do you think that host authorities should actually have in the availability of unallocated TLAC resources? Is more work needed here?
Thanks, Melinda. And this is really is a key question to which the answer, I think, is essentially yes, more work is needed, because to reassure hosts that the right balance has been struck, and this is what I think the essence of the discussion here is about, between pre-positioning and flexible resources at the group is key. And hosts, of course, will be more comfortable with lower pre-positioned amounts, and homes with fewer. Sorry, the other way around. So hosts will, want to have more in their jurisdiction and home of MREL, and therefore that they feel they can control, and the home will want to have greater oversight, the more under its jurisdictional control. But if they trust where those resources can flow, then and that they will do so in the best interest of an orderly resolution, that's key. And of course, the flip side of those resources not being able to flow around the group, as we were discussing, is the dangers of local fragmentary actions. So, appropriately allocated, then this type of resource structure can help cooperation in resolution, but only if the parties understand how these resources could be used, how they'll be used to fill shortfalls in subsidiaries wherever they occur, and trust that will actually happen in practice. And that's why we've been having this discussion about legal requirements to reinforce that. But also, as we've been discussing, this is not just a theoretical exercise, and resources need to be observable. I think David was making this point, sort of tested, predictably deployable, and mobile. As we know, put simply, resolution is about saving the group and fixing it later. And to avoid the global stability impact seen in the last financial crisis, where losses and disruption were amplified by the failure of Lehman's, we need to ensure that unallocated resources are not only available, but really, really mobile, and without delay. So having these unallocated resources that the host authorities can see, can understand how they will be deployed, and confident that they will be deployed, will help lean against this desire for the home authorities to try to operate in isolation. And if we think about it, the opposite of an orderly resolution is, as I said before, trying to rip off part of a highly integrated bank and triggering internal MREL to support that. And this is not only likely to leave the failing bank irreparably damaged, but trigger, of course, the failure of the whole group, or bring forward the failure in a way that makes it less orderly, less likely to minimize losses and financial stability consequences, and less likely to prevent contagion. So put another way, fragmentation, and Elke mentioned this in her opening remarks, means that we all face more risks, and that's whether we are home or host. So while it's an important part of preparing for the unknown, pre-positioning resources is not a substitute for that trust. It's a confidence enhancer that in times of stress, resources will arrive if needed, but it's not a substitute for that trust.
Mm-hmm.
And of course, the other thing, when we think about the need for free-flowing resources around groups, is that the authorities do not have a crystal ball. We don't know where losses will arrive across a group or in what sequence. And the higher the levels of distributed resources means less flexibility at the parent, as you were saying, Melinda. Upstreaming and then downstreaming resources is likely to be more of a challenge than simply downstreaming. So that, suggests more of a weight to group unallocated resources. So I guess the way I think about it, this on the one hand, with hosts having certainty that's provided by the internal MRL, but on the other hand, the flexibility is lost. That flexibility, of course, if the host thinks about it this way, they may need to be the recipient of that flexibility in one resolution scenario, and you don't know, as I say, none of us know what this resolution scenario will be. This point that I think Tobias is making about, where does the source of shock come from? So thinking about, well, I just need resources in my jurisdiction because then I'm okay. You actually might be the jurisdiction that needs more support than the internal MREL requires. However, it's a kind of lower probability that event may be. I think just another practical point I wouldn't mind making, which is that unallocated resources are not are not.
Thank you.
They're not fixed or predictable, sort of wrapped up like a Christmas present under the tree. They're what's left over from pre-positioning, and it's important that we think about that. And I just wanted to make one point about transparency here. So the level of pre-positioning in hosted authorities is not something driven and solely controlled by authorities. We need to understand this. So regulatory requirements, scalers, impact of consolidation, of course, do come from the authorities, but banks have their own local risk appetite for having resources at subsidiary level. There are remuneration and management buffer policies that can also incentivize downstreaming and so attract unallocated resources at the group. So it's important that we understand, and there we are transparent, not only within the CMGs, but more widely about the drivers of these and how they add up. So we understand what's driving the quantum of unallocated resource and therefore what's available. I'll stop there.
Yes, and I'm sorry to interrupt, but in fact, we do have some audience questions coming in, and I want to be sure to get to a few of them, and our time is running down. So I have a question here that I'd like to put to David Livingston, if I may, coming from the audience. It reads thus: could the intermediate parent undertaking, the IPU requirement for third country banks, be a challenge for the maintenance credibility of their single point of entry strategies?
Yes, but practically you would hope in the execution, no, in that particularly, and it's one thing that we've certainly considered for our European bank IPU. We operate in 20 of the member states, primarily through branches, but with a subsidiary parent undertaking within the EU, is that when you come to a practical level about arrangements and legal systems which are different cross-border, where you locate the IPU may well have, you import in a way some of the national characteristics of the underlying legal system, which is, as we know, within the EU, not harmonized. And therefore that might, you need to have that in mind as you make the choice about the location of the IPU relative to your existing operations. But the answer is no, it should be accommodatable within the existing framework.
Thank you. Thank you very much. I also have a couple of questions that I'll put to Sebastiano, but if others wish to weigh in, just give me a sign. And again, with the request for brief answers, if you'd be so kind. The first question is this, Sebastiano. While home host cooperation is pretty much a win-win game for larger jurisdictions, how can we address the imbalance between very large and very small home host relationships?
But as I said, we have this framework in the EU. No, I take as an example the EU, where we have a lot of provisions in the legislation regarding prepositions MREL. And then we have also the possibility, the conditions being there, to provide waivers. Now, of course, this is a recurrent observation from the host authority. Yes, but the parent company will leave my small subsidiary, which is relevant in terms of market share, small for the group, but relevant in terms of market share for my country, behind, because they do not care. Well, frankly, I fail to see this happening, first of all, because if there is a prepositioned umbrella, this would not happen. If there is a waiver, this doesn't mean to have no requirement. The waiver means that there are other safeguards that have to be there, and we go to the debate we have just had. Then you have to think in terms of impact of leaving that subsidiary behavior for the overall reputation of the group. And frankly, after all the enhancement that we have been doing after the great financial crisis, I have not seen any case where a subsidiary has failed and the parent company went unscathed and leaved it behind. So the reality, I would say, in many cases is different. Of course, it is more complicated if both subsidiary and parent are in crisis, because if only the subsidiary is in crisis, maybe it's simpler. But if also the parent is in crisis, you have all these legal issues and operational issues that have to be addressed in terms of no creditor worse off, duty of care, possibility to enforce these contractual arrangements if they exist, which, as I said, would go a long way towards. But consider that if you have a small subsidiary in a non-banking union, a European Union country with respect to a large group, well, the effort in terms of resources cannot be enormous, frankly. Thank you.
Thank you very much. I'll come back to you in a moment with one more very brief question, but perhaps I'm going to put the next one to Tobias Ströger, because in a way it's an almost poetic reflection of the link between home host and gaps in the banking union. The question is this: some people use the home host terminology to relationships within the banking union. Is this not a misuse of the term, given that we're talking about a single banking jurisdiction rather than several homes and hosts?
Well, as I said in my remarks, the idea of the banking union certainly is along the lines of this, almost romantic, as you put it. But the reality is, I think, significantly more brutal, because if you think about banking union as an institutional arrangement to overcome the fragmentation in banking markets, it didn't really work that well. And that, of course, makes all the national divergent interests and preferences on resolution weekend resurface. And therefore, I think it is an accurate description and a realistic description to talk about home and host also within the banking union, because these signifies significant divergences in incentives. And therefore, I think it's correct. But on the other hand, of course, normatively, we should be somewhere else.
Thank you very much. And back to Sebastiano for just a couple of pre-closing sentences, as it were, because I would also like to get Elke Koenig's reflection before we close this SRB debate. But let me just ask you, because we've talked a lot about the need to foster cooperation in practice. We've talked about processes of coordination within crisis management groups, and both Elke and I think also Sasha mentioned the importance of simulation exercises and dry runs. So can you just very briefly wrap up for us with a little bit of information on what the SRB is doing in these areas to foster all of these efforts, in fact, to build trust and processes of cooperation?
Thank you, Sasha. This is a very good question for me. I mean, one of the things I favor to run a simulation exercise, or as we call them at the SRB, dry run. What they are about. Once you have a fairly stable legal and crisis management framework, you run simulation exercises in peacetime in order to enhance your crisis readiness. So the rationale is to find out and address the procedural or substantive problems that may emerge if an actual crisis breaks up. And it is, as you said, a very important occasion, as Sasha mentioned, occasion to get together the representatives of a particular banking group, because the simulation always, mimics a real banking group, although changing some of the data and the items, but it is a real situation. It is so a very important occasion to build on the networking and reciprocal trust in a difficult situation. So we at the SRB have been running these exercises in the last 3 years. The last one was performed last April and had as a goal to test the procedural and cooperation and communication and joint decision processes for a resolution college bank. So a bank with the head in the banking union and 3 subsidiaries outside of the banking union. This approximated a real group. It had many more subsidiaries outside of the banking union and in the banking union, but to simplify it, to keep it manageable, we decided only to have 3 subsidiaries outside of the banking union, one of which failed together with the parent, the other 2 didn't fail. So already you see the differences in behavior regarding what would happen with respect to the other 2 that fail, and what are the legal procedures, the cross-subsidization, there isn't, etc. And then, of course, we wanted to test the interaction between home and host, of course, where in this case, the home is the SRB, Resolution Authority. This exercise, although you could say it is modest, but entailed the participation of roughly 100 people between NTA, NRAs, Commission in the various directorates, the EBA, the ECB, of course. So this last exercise identified topics for policy and procedural improvements related to joint decision making, and provided also very useful food for thought. I already made a reference to that, about the further steps that we need to undertake to fully operationalize the single point of entry resolution strategy. In 22, we are going to continue on these exercises, and we want effectively, on the basis of some scenarios, as I already mentioned, to test another probably college bank in terms of operationalization of bail-in, and of course to test the loss transfer mechanism and the application of a tool that we have been developed to calculate very precisely the bail-in liabilities, bail-inable liabilities. In global forum, and I conclude, we are very much engaged, and Sasha knows what I'm talking about wide-ranging exercises, these were also very time-consuming, very intense, with the 3 main jurisdictions, as I said, banking union, US and the UK, in testing what would happen if a TLAC bank with establishment in the 3 jurisdictions went under. And this was also a recipe of a lot of food for thought to enhance our cooperation and preparation going forward. Thank you.
Thank you very much, Sebastiano Laviola. Thank you to all of our panel. I'm afraid we will have to leave it there, but it has been a very, very interesting, very thought-provoking, and I hope also very constructive debate that we have had. So my very warm thanks to David Livingston, to Sasha Mills, and to Tobias Tröger, as well as to Sebastiano Laviola on behalf of the Single Resolution Board. Before we close, I would like to give the floor back to SRB Chair Elke König to just get a few reflections from her about this issue that I know is very, very dear to your heart.
Definitely, this is an issue dear to my heart, and definitely I have to thank also the participants for all their input into the debate. And let me perhaps reiterate just a bit without summarizing a rich debate. I full-heartedly agree with the importance of cooperation between the authorities. I've in the past sometimes said we have all roughly the same idea what we want to achieve, but now we need to make sure that when we talk about something, we also understand that we mean the same and that we have to work within our legal framework to achieve probably the same outcome in slightly different ways of going. So cooperation is key between the authorities, and cooperation is key, and I think this came out of the debate between the authorities and the banks. Show me how it works, show me where the challenges are. For me, one thing is also very necessary in this debate. We, as resolution authorities, are not defining whether it's a single or multiple point of entry. But one thing is for sure, when you have a highly integrated cross-border banking group, well, then the parent and the subsidiaries cannot do without each other. So you are at a single point of entry. And I very much like what Sasha said. We have one shot, we need to get it right, and we don't have too much time. So single point of entry is basically stabilize first and then solve the problem step by step later. I don't think that there's any dispute on this. And of course, it's, as I've always said, it's very easy to say in a single point of entry, you need to be able not to abandon a subsidiary. You need to be able to downstream capital or upstream losses, very easily said, but in an environment within the banking union and beyond, where we have to focus also on legal entities, and I like very much what David said to this extent, and on different tax, corporate, and the like laws. You need to really test it. You need to ensure that what you have as a concept also survives in reality in stress situations. And I think we all have come somehow to the conclusion that pre-positioning is the one part, and the other part are the unallocated free resources. And for me, the third part, and perhaps the base of this, are most likely contractual arrangements. I think highly likely that we need them to make sure that all this is happening in situations of stress or even in gone concern. I think Sebastiano already gave you a flavor of the difficulties we might be seeing when he mentioned our dry runs. I've always said at some point you will have the United Nations around the table. So big cooperation is needed, because otherwise you have many authorities and everyone is getting very much focused on my problem and not our problem. Again, back to cooperation needed. And perhaps one last word. Branchification was a word that came up in recent times. It's probably not the magic wand to solve the problem, but single point of entry in an entity structure or branchification are at least two concepts that you always need to look at. So I think there is a lot of food for thought and a lot more to be done. And probably, Melinda, next year, same topic, but hopefully 2 or 3 steps further down the road.
I certainly wouldn't rule that out. Let me just hand back to Sebastiano Laviola one more time to say goodbye on behalf of the SRB. Please, Sebastiano, you have the floor.
Thank you, Melinda. And of course, it is not my ambition to wrap up the session, but I think that we have had a very interesting point, both made by David and Sasha on the global landscape. That's to say, how, in the case of David, how a big GSIB has to work and be organized in terms of resources, stress testing, this availability of resources, governance of the crisis management. Sasha made very important points regarding cooperation and coordination. We all share that, and on the work that we have to continue in order to benefit from the crisis management groups. You know, these are for the GSIBs. They are underpinned by cooperation agreements signed by all the authorities involved. In the banking union, European Union, we have the cross-border resolution colleges. For the GSIBs, we have also these CMGs, and these are very important and proved to be also helpful when the pandemic struck, where the work in terms of coordination and cooperation and sharing of information was crucial to stem fears that then proved to be unfounded. At the beginning, as we know, nobody knows. Thanks also to Tobias from my side for the important points he made on cooperation and coordination on Brexit and the approach to supervisor, different approaches, which, however, don't seem to have a bearing on the HOMOS debate, and the other points he made on PIA and the branchification. So with that, I hope that from the SRB point of view, we have contributed to this debate. And as we said, as Elke stressed, this is a point very dear to our heart, and we are fully engaged in order to address even the most detailed operational problems that we might face in putting in place the single point of entry strategy, which is, the most used by the groups under our remit today. Thank you very much.
Thank you very much. And dear ladies and gentlemen, thank you as well to all of you for being with us for this SRB debate. We appreciate very much your attention and your contributions and look forward to seeing you again. Until then, stay healthy. Goodbye.
Thank you.
Thank you. Bye.
Thank you.
Goodbye. Thank you.
Bye-bye.